And welcome back to the halftime report. Tesla's price target cut to $1,200 from $1,300 by Morgan Stanley. The firm is trimming Q2 estimates on lower volume. Elon Musk actually just recently complaining about some supply chain issues. It is one of our calls of the day. Brenda, you recently bought it.
We did recently buy it for the first time, but I would say, Tesla's not immune from some of the supply chain issues that are really impacting companies inside and outside of the auto sector. But we think that this company continues to be really well positioned. We're expecting that they're going to be able to ramp production with our Austin and Berlin facilities ramping up. And this company has pricing power, and that's important in this environment. I think to stick with companies that have a great niche, a great moat, and that have pricing power, and we think Tesla has all of those. In this note, the price target reduction was simply because of an adjustment to the risk-free rate, and I think we'll be seeing a lot of that as interest rates have risen. So I don't want to read anything into that. Still think the company is really well positioned here.
Pete, over to you. You have a few Tesla calls, right?
Yeah, I did, and I no longer have those. But yes, we even had some buying just again the other day with the stock trading right around that 680 level, and then it took off to the upside well over 700. But, I think that's what we're seeing in Tesla right now. You see these just surges suddenly and then a pullback, and a lot of it could either be the commentary from Elon Musk himself or some of the news that gets out there. So I think that they will have some issues, obviously, a little bit of a slowdown on some of the volumes of delivery, but they're going to be able to make that up, I think, in the second half of the year. So I think this is definitely a solid. I understand why she's holding on to it. I like this name a lot, but when you get quick moves like we've had recently, I think you got to take those off because these markets right now are definitely trading markets. They make it very, very difficult for long-term holds.
Jim, we're also looking at Disney, reiterated as a buy Bank of America target, though, cut to 122 from 140. What do you think?
Well, it's a tough time to be a Disney shareholder, and I am one. The reason it's tough is because with all of this talk about recession, what you think about is their, very important profits at the theme parks dwindling away if people stop going. And inflation certainly has been seen to really be prevalent at the theme parks. But here's the thing. What if we don't have a recession? Or, what if jobs stay plentiful? We did have initial weekly jobless claims tick down slightly this week, and the continuing claims are hovering at 50-year lows. So maybe the worst is in here in Disney in terms of predicting a recession that has yet to arrive. So I'm comfortable holding it, but I understand what the risks are facing me and the other shareholders.
So, Josh, I want to come over to you with Netflix. Two different takes on it today. Bank of America reiterating underperform, Cowen reiterating outperform, giving it a $325 price target. Where do you see it at, especially in this inflationary environment?
I think it can outperform. I actually think this is one of the few businesses in the market that the inflation, let's say the inflation scare, might actually be overplayed. I think Netflix, similar, I've said this about Starbucks too, there are things in this world that are just affordable luxuries, and people don't give up on them as quickly as you think they might, even though they might not be necessary. So a cup of coffee is one, and I think a video subscription is two. This is a stock that was $700. It's $176. In January of 21, it was selling at 47 times forward earnings. Today, it's 16. And as a matter of fact, it's actually cheaper than Disney, which sells at a forward earnings multiple of 22. So I think a lot of the risk has come out of this name. I don't think everyone in America or everyone all over the world is about to cancel their Netflix subscription to pay for gas. I think that's very unrealistic. And this is the type of stock where you've already had so much pain. It's hard for me to imagine another year worth of news, that people weren't expecting. Nobody is expecting much from Netflix over the next, 6 to 12 months. So I like it here. I think it's gone through enough.
Yeah, Netflix shares down 70% year to date.